Hey guys, today we want to share with you the mistakes that we made when we just started investing, and that will be we invested separately.
Yes, so first thing first was the duplicated brokerage fee. So previously we were trading using a different brokerage account and buying into the same company stocks. And back then we were still using the bank's broker, which charges quite a substantial amount of transaction fee every time we buy or sell the stock.
Yeah, even nowadays with emerging platforms like Tiger Broker and Momo, which charges very low platform fees and commissions, but why not save on all these fees and just trade with one account? And that's what we did recently, and we just combine our portfolio together and just trade with one account, and we save a lot of money from that.
Yes, definitely. So the second mistake of investing separately will be the duplicated time that we spend researching on the same company.
Yeah, we realized that we should actually agree on a few fundamentals and investment philosophies, and that would be more efficient in our research. So if any one of us pick up any companies, we know that the fundamentals are more or less aligned with what we have agreed upon, rather than having each of us, research the same companies in the same depth and details.
Well, then again, the stock market is pretty dynamic, so we can always discuss with one another on the different companies that we are looking at and even cross-check our understanding on the financials or business economics of the company before we decide whether we want to initiate a position in the company.
Yeah, overall we find that this is not only more efficient by doing away with the duplicated time we spend researching on the same companies, but it also kind of strengthen our investment and financials know-how by discussing, debating, and cross-checking with one another.
So this leads us to the final problem of investing separately previously, which is having a concentrated portfolio.
Yeah, we only have so much time for research. So by freeing ourselves by investing together, we free up a lot of time. So now we can research on more companies and diversify our portfolio. But more importantly, I think for us, it kind of helps us diversify our portfolio to other asset classes as well. Yeah, she's more into the passive approach. So with me looking at our stocks, she explored other platforms like Stashaway and Scythe, and in the process help us diversify our portfolio.
Yeah, and he's not interested in it, so I took charge. So basically, we are trying to leverage on each other's strengths here, even beyond investing.
Yeah, like I don't really have as much interest as shopping as her, but sometimes we still get stuff, like necessities, clothes, groceries. She's really good at finding deals online.
Yeah, I think I've helped to save 20 to 30% of what we would have paid if we did the shopping instead. So back to the topic on investing. So sometimes one of us may feel the fear of missing out when the market is rising, or the other way around, we may feel the fear, uncertainty, or doubt when the market is going down.
Yeah, but with each other to account for both of our stake in the fund, we can help to keep each other's emotion in check.
Because sometimes that's the most important thing to keep in check.
Yeah, if we want to succeed in investing in the long term.
And last but not least, it gives me an opportunity to track his accounts and funds.
Anyway, hope you have learned something today. Appreciate if you can give us a thumbs up and subscribe to the channel for more updates. And see you next time.